Well, let's get going. We're going to have a bit of a conversation for 15 minutes. And you've been doing this for a long time. So I hope that you're going to share some words of wisdom with us that we can all learn from. You've been very successful in what you're doing. So I guess I'll start with a kind of generic question. In your job, which is essentially looking for investment opportunities, what are the kind of key questions that you ask yourself when deciding where to look, whether or not to invest in a sector or a business?
Well, first of all, thank you for your kind introduction, Joanna, and it's a pleasure to be here again. I would say the three top questions we ask ourselves each time we make an investment is, first of all, what will be the impact of inflation on the business? We're experiencing inflation at levels that we haven't experienced for more than 4 decades. So naturally, it's impacting every business that we look at. What it really impacts is the cost of the companies that we look at, the cost pressure, which by definition will have implications on the margins. So we look at what the impact of inflation will be on the margins of companies and the profitability of these companies. The second question we ask is, what will be the impact of interest rates? Interest rates have, by definition, increased the cost of capital of businesses, and these will impact multiples. So our expectations are that valuations will be impacted downwards. There is always some lag between the public market valuations, which we see now, the downward pressure, and the public market sector and the private market sector. But I think interest rates is a big subject on how this will impact multiples and valuations. And I would say the third one is, in each business we look at, does this company have multiple levers of growth? There is no doubt that growth will be impacted in the next, call it 12 to 24 months. A lot of people are talking about recession, but even if there's no recession, growth has slowed down. So we look at companies that can grow faster than the market. And these can happen through pricing, it can happen through volumes, it can happen through international expansion, through M&A. It doesn't matter how the growth is going to happen, but we're looking at businesses that are not relying on one lever, but multiple levers of growth.
Great. Well, you're now operating, and that's the title of the session, Investing in Times of Geopolitical Uncertainty and risk and economic headwinds. That's what we're facing right now. And I guess at the end of last year, nobody was anticipating that we're going to have the ECB raising interest rates as rapidly as it's clear they are now going to do. So yeah, very different operating environment for you. So how would you say, where is the balance at the moment between risk tolerance and risk aversion, given all these pressures, runaway inflation, central bank monetary policy tightening, and some of the other headwinds that we've talked about during the conference?
The first thing I would say is pricing risk in this environment is very difficult. And even though as investors our job is to price the risk, when you're dealing with the unprecedented levels of inflation, increased interest rates, geopolitical uncertainty that we all deal with, then it's a very difficult thing to do. So the asset selection, as in the type of businesses we select to invest in, is become even more important than it was before. And for us, this is the number one focus, is investing in sectors which tend to be defensive sectors. And then when I say defensive, I mean downside protected, where they're not cyclical, they're growing, even though they might be growing less than in the past, and where we think that there's a lot of optionality. But there's no doubt in this environment, our job has become more difficult. And I think what you will see generally, the investment community, despite the fact that there's a lot of liquidity in our industry, just in private equity alone, there's more than $4 trillion at the moment of uninvested capital. Despite that, I think people will be a bit more cautious in the next few months until there's more clarity. I don't think there will be certainty, but at least there will be more clarity or visibility on what the new headwinds or tailwinds are going to be.
Thanks. What is your baseline assumption about recession risk? I mean, it's clear now that consumer and business sentiment is going to take a big hit, that things are likely to get much worse over the next 6 months. So I'm talking about Europe. Are you assuming a recession, or what would possibly cause a recession in Europe?
I'm always scary of making predictions on recessions. I think that's the job of the economists and a lot of, not the economist, but the economists. But also, in that sense, sometimes they get it right, sometimes they get it wrong. There is, again, no doubt in my mind that even if there's no recession, there will be a substantial slowdown in growth. So as an investor, what we should do is to look at where can we invest in countries and companies where we know growth is going to slow down. And there will be some sectors that may benefit directly or indirectly from what's happening currently globally. There will be some others, and I think most of them, those that have more consumer exposure, that will have a negative impact from these. And these are the ones that we are a bit more cautious and very conservative investing against at the moment.
Okay, thanks. And just to follow up about geopolitics specifically, because this has now become probably top of the list in thinking for business leaders, thinking about the medium term and the long outlook. And some business leaders said the point that geopolitics is now front and center of business decisions. So would you agree with that? And what does it really change? How does it affect your decision making?
I would say historically, especially global funds like us, we're not paying too much attention on geopolitics because we tend to invest in developed economies, in mature markets, in Europe, in the United States, and North America, which geopolitics was very rarely a factor we need to consider. I think this time around, we have to take it into account. I would say the way we look at the geopolitics is what impact any geopolitical situation has in business, and in a lot of these cases, the main impact could be on foreign exchange, the FX risk that the business can face when they have issues geopolitically is important. It could have impact on supply chain disruptions because geopolitical tensions do impact the supply chain. It could have impact on labor shortages. We see this almost across the board, regardless of any sector we invest in. There is labor shortage at the moment, which by default, when there is a labor shortage, it leads into wage inflation. So the cost of wages are higher, which means the cost pressure on the companies is more important. So I would say geopolitics is relevant for us much more than it was in the past, but not so much from a macro perspective. I think on more from a micro perspective and the impact it has on businesses, their growth prospects, and their profitability.
Right. So yeah, you're an investor, I'm an analyst, and as analysts, I know that we tend to focus quite a lot on risk in our line of work, and perhaps not enough on opportunities. Mm-hmm. And of course, there's always opportunities, even in times of great uncertainty and geopolitical upheaval and so on. So you've touched on this a little bit, but maybe you could say a little more about how do you, hedge risk at a time like this, and how do you seek out the opportunities?
Every investor will tell you that in times of crisis or in times of uncertainty, it's actually a good time to find opportunities. And especially, as I said before, in an industry like ours, which is very liquid at the moment and with a lot of capital that needs to be put to work, that's our main job. I think the finding opportunities in this environment is going to become a bit more difficult, but I think there will be opportunities. I do think that the opportunities will come in sectors where that downside protection will be more important, and it will come in sectors that may have been disrupted in a good way through this crisis. So energy is a good example of a sector which, by definition, depending on which side of the energy spectrum you are, you may find very strong opportunities to invest, or there might be substantial issues or headwinds facing you. I think sectors which are more dependent on consumer spending will be impacted. Consumer spending has been a very big driver of force for a lot of the economies. Even if you look at mature markets like the United States, 2/3 of consumption is internal consumer spending. And again, the United States has less impact from what's happening geopolitically across the world, but even United States are impacted from this. So I think our view is, let's focus on areas where either sectors have been disrupted in a good or in a bad way and might provide opportunities. There is, again, little doubt in my mind that valuations will adjust downwards. We see it already in the public market environment. I think we'll see it also in the private market. And I think in this environment, as a buyer of assets, there will be opportunities to buy them at a better multiple or a better valuation that we could in the last 2-3 years, where there was a big euphoria in the world that everything is only going one way, everything is going up, and where the world was flooded with cheap cost of capital because also lending was cheap, when inflation was unprecedented low, and there was no concern about geopolitics or everything else.
Thanks. So let's talk about Greece a little bit. So would you say that Greece has restored its reputation as a good place to do business, or is there still work to be done? What still needs fixing, in your opinion?
That's a broad subject, and since we have several ministers in the room, so I'll need to be careful on what I say about what needs fixing. There's no doubt in my mind that Greece has restored its credibility. It has restored its reputation. This has happened in the last 2-3 years, and you can see it in practice by the amount of foreign direct investment that has come into this country, which is the highest that it has been for more than I can remember. I've been investing in Greece for the past 15 years, more than 5 billion euros, and I can say that the last 2-3 years have been the best environment that I have seen in terms of investing in this country. Greece has always had a couple of characteristics, in my mind, that have always made it an attractive investment destination. The first one is it remains a European economy. It has no currency risk. There's no hedging that is required when it comes to this. And geopolitically, it's in the right spot. It also has an exceptional human capital. And having invested across the world, I can say that the quality of the Greek human capital is excellent. So the combination of these two makes this country an attractive destination. I think what has been added in the last couple of years as an attraction for Greece is the timing. The fact that Greece came through more than a decade of recession, effectively, which means the growth, and that growth has been disrupted with the geopolitical crisis we're facing, but I think it's going to be restored. That growth of Greece is now substantially higher than some of the other markets, and it could make it attractive. Now, what needs to happen, I think, is effectively more of the same. In my book, we should continue the reforms that have been happening that have made the Greece a more attractive destination. It should continue all the digitization that's happening to take away one critical thing that has been an issue in this country, which has been bureaucracy. It's not 100% disappearing yet, but it's been a fantastic job in doing so. And I think what you need is stability. And stability, I cannot emphasize enough the importance of stability across the board for any foreign investor that comes into any country, Greece included, of course, given it has had volatile times in the last decade or so. I think that's what's required. If the reforms, if the stability, if all the actions that have been taken continue, I would like to believe that you will see more investment coming to this country, because in my book, the most important role of a country, of a state, of a government, for that matter, is to create that environment that can allow entrepreneurship to flourish. Because having seen it in every other country, entrepreneurship is the key energy and the key power for growth. So as long as any government, any state can create that environment, I think this country has nothing to be afraid of in terms of attracting capital.
Thanks. So, well, let's continue talking about stability, because for the last 3 years, Greece has had a majority government and a stable government, which hasn't been the case for quite some time. And despite the pandemic, despite the latest crisis with the war in Ukraine, the government has actually seen through quite a lot of the original agenda that it set for itself at the beginning of its mandate. But now we're facing an election next year. Some would say that we might be facing a snap election this year, and that's certainly something that we've been thinking about, because actually we do have to forecast if there's going to be an election or if there's going to be a recession, and that's what our clients expect of us. So we have to make that call. So I'm not saying that asking you to make a call about whether there's going to be an election in September or next year. I'll ask the minister that maybe. But what I would like to ask you is whether you're worried at all about election-related uncertainty, because one thing we know is that at the next election, the winning party will not benefit from the 50-seat majority. That will happen at the election after next. So we might be faced with a coalition government, or maybe another election after that. But you don't have to make the calls, but does it worry you at all that we're now entering a kind of more febrile kind of political period, maybe?
So first of all, I will definitely not going to make the call on the elections. What I would say is, back to my earlier point on stability, if there has been one thing that has attracted foreign capital into this market, has been the stability and the way that government has behaved. The reality is that investors do not really care who governs. They care how they govern. And I think that's something that sometimes might be lost in translation. But the reality is, even myself, despite being Greek and of course have been investing in this country for a long time, what I really care about is how the government governs. And that has to do with the policies it takes, the fiscal, economic, all the reforms that I was saying before, and the stability that's required. So absolutely, it worries me if that stability gets disrupted. And it won't just worry me, I think it will worry any foreign investor that I know of, not just in Greece, as in every country. Because once you have that stability, I think disrupting it creates uncertainty. Uncertainty impacts the appetite of investors to come into any country or any investment, which by default, it will impact also how much foreign direct investment this country will take. And I think Greece needs foreign direct investment. So in my book, it needs stability. So I hope there will be stability.
Okay, well, thank you very much indeed. Very nice to have that conversation with you. Thanks for joining us. And we're going to now look in a bit more detail at the state of the business environment and what's changed over the past year with the Minister and our other panelists. But thank you very much.
My pleasure.
Indeed.
Thank you very much. Thank you.